Hi everybody. Let's just wait for a couple of more minutes for more participants to join in. We'll start in about 3 minutes. Okay. One basic query before we start the session. This session is applicable to people from the US as well. Yes, it is applicable to non-resident Indians. Uh, this is applicable for all non-resident Indians. No problem. Okay, if you're a resident Indian, then you can just understand the approach of our multi-asset strategy because we have a resident multi-asset PMS, which is called Sphere. So both are managed by the same team. Both are very similar in terms of strategy. Okay. I think let me just start. Okay. Presentation visible, sound okay. Uh, is the slide moving? So this is a presentation that we have done multiple times, but it's a good refresher about how PMS works versus that of a mutual fund, and why should a person choose why should a person choose investing in a PMS versus that of a mutual fund. Okay, what is NIO? NIO is a multi-asset strategy uh, from our entire offering basket. So we have four strategies. One, a flexi cap strategy. Second is a small cap strategy. Third is a large cap strategy. And fourth is a multi-asset strategy. Now, within the multi-asset strategy, we have two. One is for resident Indians, which is Sphere, and the other is NEO. Okay, so NEO is our multi-asset PMS. Okay, so what happens to investors in volatile markets is that one, they say markets have moved up. I don't want to wait. I don't want to invest. I just want to go and wait it out until a correction comes up. I've got enough proof that I put in the money before it's too late. So there's one, there's doubt. Second, there's FOMO. Third, there is doubt. Again, lack of self-confidence. It's been a week. My portfolio is down. I don't know what to do. So too much of, tracking, too much of something an investor should not spend a lot of time on, right? You start going through this phase of thinking, okay, have I lost that opportunity? Is the opportunity there? And that level of decision paralysis is not, it only harms your wealth creation journey. It does not add anything to you. You think that you're trying to time it, you think that you're trying to do the right thing, but it's not usually the case. Okay. So what happens? You don't have any investment discipline. You're trying to chase something that has done very, very well. And you're very anxious about what to do. That level of self-doubt comes where you say, I don't know whether I've done the right thing or not. And that, you're missing certain milestones, right? So let's look at the types of investment options that's there, right? So there's mutual fund, there's PMS, there's AIF, and there's SIF. SIF we will not cover at all, right? AIFs, majorly is high ticket. Plus, we do not have any AIFs right now in our basket, so we will not look to cover it. But within the PMS service, there is a discretionary PMS and there is a non-discretionary PMS. Discretionary means that the fund manager will take all the decisions on behalf of the investor. So there's an agreement that takes place between the two parties, clearly highlighting what our approach is, what the derivatives are, what is the fees, and we will take all the decisions on the behalf of you. Second, there is a non-discretionary PMS where you can do whatever you want. The manager will just offer advice, up to you whether you want to execute it or you don't want to execute it. Right? Simple. Similarly, we have open-ended mutual funds where the fund manager, similar, right? To discretionary, the fund manager takes all the decisions, buys and sells for the particular fund. You get the units at the end of it of the fund. For the discretionary payments, the stocks are under your name in your demat. Right? Closed-ended mutual funds. Right now, there are not a lot of closed-ended mutual funds, but these are limited number of units that are being allocated to investors and can be traded only during specific windows. So right now, not a lot. Everything in the industry is all open-ended. Now, why would you choose a PMS over a mutual fund? Let's get to the basics of it. Why would somebody want to go to a mutual fund versus that of a PMS or a PMS over that of a mutual fund? Better returns. All right. Any other option? Yeah, it's tailor made. All right. But why would you choose, up, I understand that you've been part of our system, so you understand how things work around here. But usually, why would somebody want to choose a PMS? When we interact, the better returns comes as one of the options to say, no, I think that I'm going to get better returns there. I'll just stick to that part. Also, we have a one-on-one relationship. Yes, perfect. Any service of ours, if you take, you will have one-on-one relationship with us. PMS mandate minimum is 50 lakhs. MF is flexible in terms of money. Yes, that is a very, very important point. PMS may give better returns, is what you say. Okay. Now, what we have seen usually is that high returns is, something that most investors look to choose to. What we say is when we look at a PMS, we are only looking at it more from a strategy perspective and the level of customization of portfolio that we're able to do for you. Right. So we look at it from B and D, which is, you get a superior strategy. Not that it can be better, but it is in certain aspects superior because the flexibility is there for a PMS manager versus that of a mutual fund manager to curate within the particular portfolio. Having said that, experience is the same. The amount of work that goes in is the same. The research levels are the same. In fact, I would say on, because of how regulation is right now, it's on par in terms of compliance and regulation as well. So more or less, right, very, very similar uh, pitches to work on, right? But strategy wise, yes, there's a lot of flexibility that is there on the strategy and on the customization of portfolio part. Now, PMS, that is more direct stocks, does not mean that you're going to get better returns, right? A well diversified portfolio is often effective in outperforming concentrated stock positions. Again, this depends on the way the strategy is curated. Now, NIO, which I'll get to about how this strategy is entirely curated versus that of a mutual fund or a multi-asset mutual fund, if we have to see within the same category, right, we will look at that as well. But usually a diversified portfolio tends to do somewhat better than a concentrated portfolio. Concentrated portfolios do extremely well in certain markets. Diversified do very well in certain markets, right? Long-term investing does not mean staying invested without any action. Whether you are doing a mutual fund or whether you are doing a opting for a PMS, right? There has to be a good amount of assessment that goes on to your portfolio, that goes on into your risk appetite, that aligns with your goals, right? Markets are always going to evolve. So it has to be in alignment with your particular goals, with your particular risk appetite. That is very, very important. So mutual fund for that matter is made for where now, given the conditions right now, uh, risk appetites are very, very well managed, right? So it's becoming more and more better managed for retail so that the experience that is being given to the retail investor who's just starting off their investment career or investment journey is not hampered. So you get a good solid experience where the entire fraternity has gone to that mentality to say we will manage money much more safer, right? So little gap that comes, okay, we can be a little aggressive when it comes to having a PMS strategy. So that little aggression comes in terms of having a PMS strategy, right? Now let's look at the strengths of a PMS. Then we look at NIO, right? One, it offers PMS is offered tailored portfolio for specific needs, right? MF is low minimum investment. I think it is easy access. I think that was a very good point that you said that no, it's 50 lakhs and then there's no minimum here. So yes, there is easy entry into MFs, but PMS definitely offer more tailor making and more customization, right? Depending on your need, depending on your risk appetite. So that one-on-one relationship that we have and that we build with you, that eventually does benefit you in the future because of us understanding your risk appetite, understanding what your goals are, what it takes for you to be able to meet that particular goal. So it's hand in hand, right? Risk management versus liquidity. So there are certain PMSs. So across the board, right? Equity investing has become very liquid in nature, right? So mutual funds by nature are very liquid. PMS, it might take some time depending on the strategy to liquidate some money. Right? It can take 3 days, it can take 4 days. At best, we have seen a week also taking place. But active management and risk management on both the sides are superior, right? On the liquidity part, the MF will score slightly higher than that of a PMS, but it depends on a particular strategy. Now, NEO is a multi-asset strategy. So for us, we are on par with the MF in terms of the liquidity because it's majorly large caps, it's majorly a good mix of debt, it's a good mix of precious metals that are easily uh, liquidatable. So you can get that amount of money on par with how the mutual fund would handle reductions, right? On the taxation part, right? Here again, the MF scores a little higher in terms of the taxation part. Now, if a strategy has a high churn, your for you it does not work well in on the taxation part, right? Whereas if a strategy is low churn, then you benefit out of it more or less at the same with mutual funds. All right. So there's a comment about first slide. Always. Is the slide visible? Yeah, perfect. Okay. So PMS maintains stability with no changes in the fund manager. Sometimes you see a lot of churn happening place, taking place also in the ABF industry. More or less from a investment style, they're different investment styles, right? So you cannot compare to say this style is better than this style. No, the level playing field is different for both, right? So in terms of taxation, MF scores slightly higher, but in terms of style and the flexibility that is there for a PMS, PMS scores better. Okay. Now this right balance, who is it suitable for? Most important part. PMS is suited for those who are high net worth and seeking personalized investment strategies. Now, why do we say high net worth? Because the strategy, since it is a little aggressive in nature, right? It can be aggressive in nature. It can be moderately aggressive also in nature. But since it is one notch above the mutual fund, there the asks also will be high. It's not one time. Usually when we work with investors, we tell that no, for a PMS, you would require a lot more contributions coming in so that we can capitalize on more opportunities. We can show higher and higher conviction on existing opportunities that have worked on very well. right? So based on that, your contributions would be a little higher. MF is ideal for retail investors, right? Now, even if you're an ultra HNI, does a mutual fund work for you? Yes, because it's tax efficient. So if tax is not going to be a problem for you, then PMS is suitable for you. But if tax is going to be a problem for you, the same amount of wealth can be generated similarly with a mutual fund as an investment vehicle, right? Because it's slightly more tax efficient than that of a PMS. On the diversification and liquidity part, we already covered. Both run different strategies, both have a diversified plus a concentrated approach, but slightly on the higher part is MF. Given how strategies are currently maintained on the PMS as well, we are seeing that liquidity is not a concern for the industry. We have not heard anybody say no, or any big case happening saying, I put in a redemption and I never got the money. That is very well sorted out by the entire industry. We do not have any problem whatsoever, right? So it's on par, probably one notch up for the MF, but on par, right? Because of the legacy that's there for the entire MF industry, right? Now, cost structure, let's look at that. uh, Mutual funds are generally low cost, right? And as the AUM has gone up for the entire industry and for certain funds, it is cheap, right? Some PMSs are cheap, some PMSs are not cheap, depending on the fees, depending on the style, depending on the strategy, right? We have kept the fees very simple at 1.5% on par with that of a mutual fund, right? For NIO and Sphere and Solitaire, it's all 1.5%, right? Kept it very, very simple. But from a broad industry perspective, uh, the MF is cheaper broadly, right? It is cheaper because the expense ratios are coming much more low. On a regulatory framework perspective, both are very, very highly, very, very well regulated. And then the regulations are very strict. Compliance is very, very strict. So you don't have to worry too much about the regulatory framework part. Now let's look at NEO and how NEO fits into the whole PMS and the MF basket. So most importantly, NEO does not have a cap on any asset class. Let me put a question out there. Are you aware with how much of based on the AMFI category, if you are a multi-asset mutual fund, how much of your investments need to be in a particular investment category or an asset category? I'll put that question out there. Okay, is it 25%? 25% as in for the minimum allocation that has to go for one asset category is 25%. Is that the comment? Okay, one asset maximum allocation is 25. Minimum 5 to 65 on each asset category. No. AMFI definition says that for a multi-asset allocation fund, investments in at least three asset classes with a minimum allocation of at least 10% going in each asset class, right? So I can have more equity, I can have more debt, I can have more of any precious metal, whatever it may be, but I need to have 10% of it in each. Minimum, I need to have 10. So I'm always allocated there. Whereas NEO does not have any cap on any asset class. We can go 0 to 100 in equity, we can go 0 to 100 in debt, we can go 0 to 100 in global funds, global indexes, global ETFs. We can go 0 to 100 in precious metals as well. Right. So we follow a top down and a bottom up research on all asset classes. So we will get to how that bottom up and that top down works. And we go with an approach of concentration across themes with a market leadership bias. Now, what does this mean? Now, for example, if the idea is that we need to have more assets into a particular theme called financialization of India, then our approach is to stick to the market leader and stick. This is across, solitaire, sphere, and neo, where the philosophy is that we want to stick towards market leaders and monopoly businesses, right, within a particular industry, right, taking much more lower and lower risk, but by also making sure that we do not compromise on the quality of the businesses that we invest in. Right. So that is the approach that we're taking. Now let's look at that top down and that bottom up approach. Now, do mutual funds do the same thing? Yeah, there are some mutual funds that take a top down and a bottom up approach. So more or less on par. Now, this is the most important slide for us. How do we maximize yields? Right, which maximizing yields means how do we make the most out of opportunities that are coming to us. Now, when we take a thematic idea, we look at it, okay, from a top down and a bottom up perspective, right? Then we look at it, okay, let's see if it does it require an active strategy or a passive strategy, because we do not have a cap on any asset class. So within equity, it's not necessary for us to only go directly with equity. We can take a basket approach as well, right? So the passive strategy is that we will take a basket approach towards investing in a particular theme, right? So that's on the passive part. On the active part, then comes, okay, do we have to have, can we not take a basket approach here? If the answer is no, then we will look at, okay, which is the business that we actually want to have more of? So direct equity becomes a big portion of the active strategy. Now, when we're looking at a bottom-up opportunity, right, there it is completely active, right? Where it is more direct equity and high quality, that where we buy straight away into the particular business rather than buying a particular basket. Now, this is how we look at top down and bottom up opportunities, right? Because we have no cap, it's very, very flexible, right? So we can move from one overvalued asset category to an undervalued asset category seamlessly. So it's not going to be a problem for us at all. Now, for an example, right? We were looking at a top down opportunity more in financialization. NIO is a discretionary PMS, so not a non-discretionary PMS, right? So when we were looking at a top-down approach, we said, do we need to take a basket approach or do we need to cherry pick our businesses? Then we came up to let's take a basket, and we chose a sectoral ETF. So since it was financialization, we said public banks are trading much more cheaper than private banks back during 2021. So we said that we will look to buy a lot more of public sector banks. So our approach has always been that suppose you start in today, your portfolio will look completely different from somebody who came in 6 to 7 months back. Why? Because opportunities keep evolving over a course of time. So we do not run a model portfolio, right? So suppose for a mutual fund, you do have, when you're buying a mutual fund, you're just buying the unit and the fund manager is taking care of all the allocations inside. But here, for you, the right opportunity in the right product or in the right business is being decided then and there for you. So it's not a model portfolio. It's not that the day you give the money 100% gets deployed. No, it takes us 7 to 8 months to deploy the entire money that you've given us to the best available opportunity that's there. Right. So it took us 1.5 years to complete our positions into public sector banking. And here we do not have a cap on the allocation as well. We can go much beyond 5%. We can go up to 10% also. So public sector banking was somewhere between 10 to 12.5% of the entire portfolio, right? So it took us a good amount of time for us to build that entire position. So we always say it takes about 1 year, 1.5 years or so to build that position. And then as things play out, so it's a staggered in and it's a staggered out. So it takes some amount of time also to trim down and exit out our positions. The churn ratios are very low. It is somewhere between 33 to 35%. So we don't churn very often. Probably we might get one good year where the whole market has done well, where the churn ratios again start going up because of that entire shift from an overvalued to an undervalued category. All right. So this is the approach. Again, our whole objective is to make sure that we are building versatile portfolios that prosper in all markets. It's not just when equity does well, it's not just when gold does well, but in all markets because of a flexible approach, right? We've noticed that when inflation goes up, interest rate goes up, we have a big opportunity in the fixed income that we can capitalize on when there's high growth and there's only easy rating. Equity is a place that we look to majorly go and invest in. In a scenario where there's no growth, low growth, and it requires to have a dynamic strategy, there at that point, multi-asset starts performing very well. So over the last 3 years, we've seen multi-asset do extremely well. And we do believe that going forward also, multi-asset strategies will continue to do very well. Right. So we are looking to build wealth for every tomorrow because markets are going to keep evolving and we will not run out of ideas to invest in. Right. So how has this done compared to, the category plus the benchmark plus flexi-cap funds plus industry multi-asset funds, right? So these are all average numbers for the entire category, but our number is is from a fund perspective. So if you see over the last 1 month, we have done well compared to the Nifty 50 benchmarks also plus the our multi-asset benchmark plus the entire flexi cap category and the multi-asset category. So you look at us more from a 2 year, 2.5 year perspective, where it's still early for us for the entire strategy to play out very well. But since this model has been in the works for the last 8 years, this is what we're able to deliver over the last 2.5 years since it became a PMS. And right, where NIO has done very, very well compared to dynamic asset as a category, compared to the largest multi-asset fund that's there in the entire mutual fund industry, plus flexi cap funds that are there, right, in the industry. So this is compared to a mutual fund, right? So more or less, we've seen very good returns coming in. Second, how do we manage drawdowns? Right. So we've not seen this number breach for us since we have a multi-asset approach here and our allocations towards precious metals over the last 2 years since inception has been on the higher side, right? So we have not seen a lot of drawdowns come in here, and this strategy, the way we look to do this strategy is to make sure that one uh, our approach is such that it should be stable and we should not see a lot of drawdowns coming in. There will be drawdowns, but since it's a multi-asset strategy, we will see probably lower drawdowns than 100% equity funds. Right. So if you look at the performance also, I don't want you to say the performance, but what you need to see is the asset mix. Right. This is as a fund, but given how things have been over the last 6 to 8 months, our allocation towards equity has drastically reduced, and our allocation towards debt as a category for one particular portfolio has drastically increased, right? So this is what I was talking to you about, that if somebody is coming in today, their portfolio is going to look completely different from somebody who came in 6 months back, right? So our allocations over the last 3 to 4 months have majorly been, and that shift has majorly been more into buying debt rather than over committing towards equity. So we do not have that pressure to always commit to one particular asset category. We do not have a particular cap on anything. Okay. Where do we operate? We operate somewhere between the moderate and conservative basket. Okay. So if your risk profile does come under this, then NEO is that particular product for you if you're a non-resident. Sphere is that particular product for you if you are a resident. And the expectations are similar to that of Sphere. It's the same basket. So average inflation plus 5 to 7% is what we look to earn over an extremely long period of time, which is 10 years plus. We want to compound. A strategy is made to compound only at such rates, right? These are estimates, these are expectations. It's not that this is a guaranteed return, but this is the assumption that we take when we want to go ahead and putting that strategy in place. Okay, 50 lakhs is the minimum investment. This is a fixed fee product. There is no profit sharing at all. There is no exit load as well. So, but usually we say that give us 3 to 5 years. It takes us 2 years to just complete by buying into everything and showing a good amount of conviction. Right, but usually we say if you have a 5 to 7 year horizon, then this is a good product, a good strategy for you to have. No profit sharing. It's a fixed fee model of 1.5% per annum. The team is set. The team is very, very strong. Research and strategy put together would be about 15 to 16 members. In all our other products as well, you have Balaji sir, who is the head of research, and he's the co-fund manager of the large cap strategy. Rohit and Rajat are co-fund managers of the small cap strategy, and Niranjan sir is part of the Sphere and Neo team. So he's fully involved in that. Right. Now I think I'll open the floor for Q&A for any questions that are there. Okay, to be part of NIO, do we need to have 50 lakhs or every year, or we need to invest additional? No, you need to have 50 lakhs to begin with, right? Uh, Not every year, but SEBI says the mandate is that if you have 50 lakhs, you have to begin only with 50 lakhs. You can exit and redeem whenever you want to. Okay, what is the difference between sphere? See, the difference is not very much. The difference is that there are certain regulations for non-resident Indians, which, so for example, you have to get an approval every single time physically for a mutual fund that we want to buy for every installment that we do for a fund. So that becomes very difficult. So we said, no, let's separate it out. Strategy is the same. Operationally, it is different. From an operational perspective, both are separate. But from a strategy perspective, both are the same. Fee structures are the same. Team are the same. Can NIO invest in REITs and InvITs? Yes, we can invest in REITs and InvITs as well. Does NIO have international investments? Yes, we did have some exposure towards international investments. We had. This will be usually via, right now it is via ETFs, but as the industry evolves, as operations evolve for us, we are always open to do direct in international as well. Okay. Before buying, will you check with us every time? No, it is purely discretionary. You will get monthly statements from us. There are quarterly returns that we publish. Plus, we have open is one-on-one. You can always reach out to your point of contact, and he can help you set up a call with the team if you have any query, if you have any doubt. But we will not be checking with you every single time. It is completely discretionary, right? So the fund manager takes the decision, and there's no, so it's a contract, it's an agreement that we sign. So it is completely up to the fund manager. When we return back to India, what happens to NIO? Return back to India, then we will see what to do if there is a resident change option. We will help you out, for any transition that has to take place. Currently, how much percentage is in large, mid, and small? Mid and small cap together is somewhere between 17 to 19%. That is from a fund perspective. Right now, we are not buying anything that is in the small and mid cap space. Debt, totally from a fund perspective, debt is about 4.5%. We have been recently buying somewhere to the tune of 10 to 12%. So we are predominantly large cap. We don't have any cap to say this much has to go in mid, small, nothing like that. Do you invest in gold and silver? Yes, the precious metal basket does involve gold and silver. So we can invest across wherever there is good opportunity. We do invest. And it has been one of the big contributors for us as well. Okay, once we are done with the 50 lakh initial investment for any additional investment when opportunity arise, I thought team will connect. Yes, two ways. One, we will always keep communicating with you that there are opportunities that are available. You can go ahead and add money with the right amount. Also, we will get back to saying we need this much. That is definitely there. Second, if at all you get into some additional capital that's there from your part, Any time is a good time to invest in NIO and Sphere, simply because we do not, it is completely flexible. Right? We can always invest in one. If the asset becomes overvalued, we can, it's a seamless shift between overvalued to undervalued. So we are not going to run out of opportunities to invest in. What is the maximum slash minimum amount you call for when the opportunity arises? No, we don't have a maximum or minimum. Usually, what we say is 20% every year. If you're able to add, then you're fine. I think then you're able to capitalize on good opportunities. You're able to meet, you know, big targets, big amount for yourself over the course of the 7 to 10 years. So usually we say 20% is good for you, and we say that the the main difference between that of a PMS and a mutual fund is that the additional capital requirements are higher on the PMS. So if you're not in a place to additionally contribute, well, then just stick to MF. Yeah, for NRI, US is a bit complex. Yeah, yeah, US, what all the NRI, for all NRIs, the taxation is very complex. We will be able to guide you. We will be able to guide you. To our best, we will be able to guide you. Okay. What is the difference between Solitaire and NEO? NEO is a multi-asset strategy. Solitaire is a flexi cap strategy. So it's purely equity in nature. Here we can invest in any asset class. We're calling it a multi-asset strategy, but it is no strange that debt portion is only 4%. Again, I told you it's not 4%. We are buying 10 to 12% in portfolios that we're building right now. And additional capital that we're building, we were doing all the way up until now for debt. How much is gold per se? At peak levels, we have seen precious metals to be somewhere between 20%. So basically, it's a large cap strategy, but no, it's not. My suggestion is you put your money first and let's have one-on-one discussions every time. Right, at peak we have seen 20% has been our allocation towards gold and silver totally. What you're seeing is what we have to report to SEBI that this is the allocation that we're doing. Yeah, fact sheet portfolio is key, and clear cut has to be there. So we are doing this week over week. We are having the same discussions week over week, right? And not only for Neo, for Sphere, for our other milestones 12 as well. So I think that level of transparency is always going to be there from our side, very, very openly. I don't think that uh, other houses would be as transparent as what we have been able to do and what we have been building uh, since our inception. So clear cut strategy, we're always open to give it to you. But if you tell us, show me somebody else's portfolio, that is breach. We can't do that. But we can clearly tell you our entire approach, what we are doing, how much is getting deployed. You want to know how much is getting deployed as of now? That also I can share. At day one deployment. Uh, So for somebody who joins in, this is Wednesday. So let's say if somebody has come in on Wednesday, on day one, only 32% is getting deployed, right? And out of that 32%, our debt allocation has gone down. So 5% is going as debt. Uh, Precious metals is 10%, right? And the rest is going as equity, but it's only up to 32% of the entire portfolio, right? So out of that 50 lakhs that you do, uh, 68 is in cash. So we don't deploy everything on day one. It's a calibrated approach where we see opportunities keep on evolving and what are the level of opportunities that we need to take. And based on that only we are looking to invest for you. So clear cut strategy here, complete transparency, right? How to connect with MF if you're interested. I filled the form but didn't get a call back. Do we need to give US number or India WhatsApp number? Why don't you just message me both right away and I'll send this to the team. I'll have this checked up as to, why there's no communication done. Uh, just message me both your numbers right away. Okay, so like in MF, there is no mandate of a monthly fact sheet or portfolio PMS. Is there no SEBI mandate for PMS? Just want to know, thanks. No, we share on a monthly basis to you. So you will get the statement on a monthly basis. So we are doing whatever we can internally to publish out monthly performance also, monthly fact sheets also, and you will get a statement monthly. Can you also put out your US number? All right. I hope the email in which you registered with is the same email that you have filled the form with. So I've sent it to the team. So I'll make sure that you get a call from the team. Yeah. So we prefer if the account is NRE, but we can do both. NRE is better. No, it has to be with the NRE. Operationally, things are different for NIO. Either NRO or NRE. We prefer it to be NRE. Okay, the fee is charged at the end of the year or the start of the year. So we take this 1.5% plus whatever your account opening, all the other sort of small charges that are there, GST and all of that. Uh, uh, this is charged to you quarterly on the quarterly net asset value of the portfolio. So 1.5 divided by 4 is what we charge you for the year, and that is charged every quarter. So what happens is when you get the statement, you will clearly know you don't have to pay a single rupee out of your pocket. You will clearly know how much money you started off with, what is the additional contributions that are there, how much is the fees that you paid, what is the dividend that you received, what is the accrued interest that you have received, what is the realized gain, unrealized gain, and what is the current value of the portfolio. Then again, you will get where most of the money is. You will get the returns compared to the benchmark also. So it will all be there for you. Very, very simple, very, very clearly put. Okay, assuming extreme scenarios whereas my has gone down below 50 lakhs, is the mandate to top it back to 50? No, we do reach out to you saying that uh, we can do this much. It can be above 50 also, but it's not a mandate that you only have to start off with 50, right? The fees will be charged to you on the 40, whatever is the current value, whatever the net asset value. So there's no mandate to say no, no, you have to top it. Only then we will be able to work on it. No, we will still be able to work on it. But usually we say that because the markets have become extremely attractive, you can look to participate a lot more at these times. That's what we will come to you with. But if you are unable to participate, that is fine. I mean, that's okay if you're not, but I mean, the market opportunity should not be missed. So we'll see when when the scenario arises, what we can do, what should we do, depending on the capital that's there. One, the capital requirement, and second, what's there. Usually, we have not seen such deep cases, but we have seen cases where participation requirement has been on the higher part. So, so there was a case after election last year where we had a, come to think of it, 2023 June or 2022 June, uh, or mostly Junes have been those periods there where call for capital has been higher, where the opportunity is very, very large for us to participate in. Even now, we had a call for capital. I've sent your number. I've already reached out to the person who's supposed to reach out to you now. She has told me that she will reach out to you, and yeah, you can interact with her. Thank you. I'll keep the floor open for another couple of minutes for more questions to come on, and then we'll close. Can we request a PF to buy specific stock on request? No, you can't do. So discretionary PMS, the fund manager will take all the decision. You can say saying that I have a compliance problem to say that I have to go back, and if I'm working for this particular company, I cannot buy the same. Please don't buy the same shares. It become a compliance issue for me. That we can set. Compliance issue rules we can set from day one. Thank you. Thank you so much for your time. Thank you all uh, for joining in. Have a great weekend ahead. For any questions, for anything that can come, please do reach out to us on this particular number, and we'll do our best to address it. And if any other query that you have, please again do not hesitate. Just send us a hi, send us the query, and we'll do our best to address it. Thank you so much. Have a great weekend ahead. Thank you.